speed. This is a game changer. This is something every long term trader knows and often is overlooked to new traders. There are three critical items that I'm going to show you today how to implement this into your TA. Yes, each one of these is a big deal and it can be used for confluence with your other strategies when trading. One, acceleration. Two is historical perspective. And three is duration. Before I explain this, I need to explain the two paths price action has to get to overhead resistance and why this matters. There are two types of price action and how it works when they're pushing up in to overhead resistance. Okay, so price action number one is moving along and it hits resistance level. Price action number two, moving along and it hits the resistance level. At this point in time, which one of these two price action movements do you think is most likely to break through this resistance level? Or more importantly, what do you think price action is likely to do in terms of immediate reaction? Okay, so if it was a daily resistance level, we're on the daily chart, so it would make sense. But if that was a daily resistance level, it's a big deal. So it's highly likely that price is going to pause and take a breather. Price action number one has taken off and it has hit this resistance level. It is likely to have a pullback. Okay. Now, whether it comes all the way back down or not, I don't know. No one does. What's commonly done is there would be a fib pulled up, and it's highly likely that there would be a retracement back to the 50%. If it's not in this candle, it would likely be in the next. Price action number two, likely to pull back. Just a second. Move this. Oh. So price action number two, it is still likely to bounce. But if it comes down and maybe it treats this area here as a little bit of support, goes back. Okay. It might get rejected again. Then it comes down. At that stage, you're on lower high watch. That's what you're doing as a trader. And that may very well be your entry point. It might simply go for a third touch and stall and come back, but it is more likely to push through. Now, the reason I think this is the case, and I'm going to use a little bit of psychology here. If everyone's paying, and this is Bitcoin, but this is, say, this price here is $4,000 or 4,400, and then it goes all the way up to 16,000. Do you think the people that bought it down here for four are comfortable holding that much profit? They're probably not. They're like, oh shit, I need to offload some. They may not offload everything, but out of the 100% of the people holding that bag, it's highly likely that 50% are going to sell or whatever because they're going to try to take their profits. That's what traders do. So it's likely to have a rejection. It highly is. Price action number two, it has built its way up there gradually. So by the time it's sitting here at $10,000, it's been at weeks in this price range. So people here, they have come to an agreement, the buyers and the sellers, that this is fair value price for this asset. So it's been in this price range just here for, arguably a week or two. So people have agreed that that is the value of that asset. Whereas it didn't have that luxury here because it's moved up too quick. When price shoots up like this, your feeling when you're a new trader is FOMO because you have the fear of missing out because every day it just keeps going up. But when price is going like this, you don't have the FOMO feelings. You don't have the fear of missing out. That fear of missing out feeling happens when it takes off without you. Okay, so just keep that in the back of your mind. So if you've got FOMO, you need to look at the charts. You need to assess where it's likely to pause or bounce. Okay, back to the 3 points we started with. Acceleration, we talked about the strong feeling that you have. I want to show you how I view this on the charts. Okay, so acceleration is best viewed when you have an EMA on the chart. And the way that I do it is you have the slow moving EMA here, which is the one underneath price. This is the 21 EMA on the daily chart, but you can use any time frame. And when price is a long away from this, I consider that overextended. Okay. So you can see here that we've had a strong rejection and price has wicked all the way down. The distance below this, it's too far. The EMAs are basically acting like a rubber band, so price wants to go back to the EMAs. Remember what I told you about that 50% rule? Let's see what actually happened. It didn't quite retrace back up to the 50% rule. So we're just a little bit low. Okay, so you can see how the acceleration and how fast it's moved away from the EMA, price is likely to retract. You can see here that it's gone back more than 50%. This was a massive, too much fear obviously entered the market. It happens in reverse, obviously, as well, if we come across to more recent price action. You can see that it's dipped too far below, so price just simply wants to pull back. The reason we need to reverse your thinking is you're most likely seeing thumbnails that are saying, the cycle top's in or Bitcoin's dead or whatever it is. China's banned Bitcoin. There's a million and one topics that'll go around the media to justify why that dump has happened. But the simple fact is that it generally always goes back to the moving averages. Moving averages may come down, but it'll always go back and reconnect. When price makes an aggressive move, just before I move on to perspective, when price makes an aggressive move, there's what's called a fair value gap. So what that's meaning is that there's a gap in price action through here because it's the wick is oversized from previous price action and it can often return. And like I said, it returns round about that 50% rule with the fib. Okay, so another way to use this, and the way that I use it with the systemation key, is on a new level, and you may not have seen this before. I actually use the distance from moving average indicator. Okay, so this is, I need to full size screen it. This is set up on the 21 EMA. I'll go into the settings. Source is closed, length 21. It's on percentage type and it's on EMA. I have deselected these two buttons here. And what that does is it basically shows this histogram, just takes up more room. It's also plotting these percentages. So the way I like to use it to get an historical point of view when I'm doing strategy creation with the systemation key, we can do quantitative analysis with the systemation key to see when's a really good time to take profit. And you could say we could put a line through there and we could put another one probably around about here. So these are extreme points in time where it's a really good idea to be taking profit. So I'll just mark that off. And let's go have a look at price and see if this is correct. So every one of these white vertical lines, we should have been looking at taking profit potentially on our trade because price historically retraces. I'm going to show you another advanced technique with this in just a second. We'll zoom right in so we can get in there. There's just too many to look at here. Okay. So you can see here that price simply got too far away from the EMAs and it's gone into a consolidation mode. So it hasn't actually pulled all the way back down to the 21 EMA until all the way over here where it's reconnected. Just so happens it's round about the same price level. You can see here, once again, it's a good spot to take profit because the following days it pulls all the way back down. You bet, it's round about that 50% mark. And the yellow line there is 50%. Sorry, I'll get in closer so you can see. I know this is too far away. And you can see here that it's retraced all the way back down actually to the 0.618. So when you're freaking out or you think, oh, geez, that price has moved a lot, in a very short period of time, it's because it has. Okay, it really has. Those that historical data that we just pulled out, you can see here that price was clearly overextended, and what do you know? Price actually had a massive return, and it's come back, well, past 50%, but there's a huge wick there, so it got bought up. Same again, it's taken off, and then price has pulled back more than 50%. It's actually come back to the EMA. So, yeah, keep this in the back of your mind. When price is overextended like this, when it's in those extreme zones, they're fantastic trading opportunities. I've got a dedicated video on the distance from moving average indicator. It's in the indicators playlist. I highly recommend you go and watch. I do have strategies that you can use with this. And for those of you interested in the systemation key, these are basically you are able to set take profits at these percentage level, at whatever percentage level you desire. So you could say when price is 8.5% above the 21 EMA, you can take off 50% of your position or 25%. That's an option. Okay, just want to show you the systemation key and what I have as a scalping strategy. Believe it or not, I was using the 21 EMA on this, and it's actually an older strategy. You can see here it's quite an older version number. I'm already up to 2.8 now, but I haven't needed to update it because this strategy, well, it's not bad. I can show you the equity curve, but effectively what's happening, it is using other indicators to help determine when to enter. But I just want to give you a real, actually, I'll just prove to you in the settings what it is. So it's the 5 and the 21 EMA. When they cross, obviously you can go long, consider as long as the other parameters have been met. And in the TP options, take profit options. Oh, this one is if price crosses the slow moving EMA, it closes. So it's very aggressive. So it will go, but it will ultimately close as soon as price closes below the 21 EMA. So this one is very active. You're in, you're out. And there is these green lines are showing take profits. But you can have this take profit set up so that as soon as price is above a certain level from the EMAs, it can take a profit as well. This specific strategy I've called the 21 EMA enhanced. There is dedicated traders who pretty much only trade the 21 EMA, and they do quite well. I've just come up with a way of automating it on another level. I just thought I'd show you the power of what you can do with a customized strategy tailored to a altcoin that's got high volatility. In this case, it's Rune. Okay, so save and close. Okay, so back to my final point here. Sorry for the shameless shield, but we move on. We digress. Number 3, duration. Okay, so this has got to do with candles and the quantity of them in one direction. You will notice that once you get past sort of 6, 7, it's highly unlikely that they continue. So you're hitting an extreme point in time. And let's go back and have a look. 1, 2, 3, 4, 5 green candles, and then we go into a consolidation mode. Moving along. These are extremes. This is pushing into the bull market, so it's extreme. 1, 2, 3, 4, 5, 6, 7, 8. 9 candles is extremely rare. I don't even know if it has happened on Bitcoin. So when you see pullbacks, the same thing applies. 1, 2, 3, 4. So 4 in a row, and then the fourth one is an extreme distance away from that EMA. So it would not be a silly idea when we're in these extreme zones to expect price to retrace back to the EMAs. When assessing this, you do need to go back and look at the chart. If you were to go through my Twitter feed, I'll say, look, we've had 7 or green days in a row, and I'll be pointing it out. Okay, so you can see here that we've got 1, 2, 3, 4, 5, 6, 7 days in a row where price has consecutively gone down. That's indicating that each day the prices close slightly lower than the day before. That's technically what's happening there. We've hit the 21 EMA on the daily. We've held above it, and guess what? We've bounced. Across here, we're above. So 1, 2, 3, 4, 5, 6. Yet again, 6 consecutive down days. And what do you know? We retrace, but we're not going back quite to the 21 EMA. 1, 2, 3, 4, 5, 6 consecutive up days. Bang, we're back past the EMAs in this case. So this is very difficult. You wouldn't code this in for a systematic trading approach. This is something that you need to look at the chart and make an assessment for yourself at the time. I find it most useful when price is being silly, and in that situation, we pull up the distance from moving average indicator and we look at the historical data to see where we're at. Is this an extreme area? And clearly, these ones here are. So when we're at that area, it's likely that price is going to consolidate. So, in summary, speed or the acceleration that price moves away from the EMAs is a fantastic way of visually viewing it on the chart. I'm going to give you an advanced tip here. If I was to go down to the 4-hour chart, and I want to get out to some altcoins, let's have a look. Oh, look at MOG, something I was trading recently. Just a second. And I'm going to put on some EMAs here. We're down at the 4-hour. Okay. When this white line here on the 4-hour is the 200 EMA. Notice how when these other ones cross and price pulls back down to it, it's acting as support. You can see here that different EMAs, obviously, price moves further away from those slow moving EMAs. But obviously, when it does cross back over, the way I see it is the algorithms flick around, and at that stage, market structures change. This was a lower high, lower low, still a lower high, but that was a higher low right there, and then a higher high. So if you're following this, you know that that specific area, market structure videos, so you know purely from your market structure that that was a higher low, but you don't know what price is going to do until it puts in the higher high. So once it puts in that higher high right there, you're immediately on lower high watch. So you're going to be looking to see what happens. And being a large time moving EMA, you really need to see price hold above it. And as you can see, once that point in time comes, which is basically through there, these EMAs cross, price does take off, but it does retrace back. Now, this is a meme coin, so it's extremely violent in its movements up and down. It's like, it's very volatile in a short period of time. This specific trade I entered here, I think 2 bars time it closed, and it was a 43% increase in price. Like, that's mental. A 40% increase in price in the space of like 8 hours. Okay, so please use speed as a value add, and it'll serve you well.